Welcome back to Instables. Again, going over our intraday swing and long perspective as we're leading into this Wednesday's Fed minutes. Again, the market will be closed on Monday, so we will have Tuesday anticipating leading into Wednesday. I'm going to go over exactly what we're looking for if we have a possible bullish Fed minutes on Wednesday or if we have a bearish Fed minutes. What exactly are we looking for? I'm going to go over exactly what we're looking for. Hit the like button if you enjoy, subscribe if you're new to the channel, and if you are a day trader, if you're looking for pre-market news before market open, looking for those major volatile breakouts that you want to be watching throughout the day, go to instables.com in the description below, and for only $15 a month, you will never miss a breakout alert today. Again, let's jump into this one. So jumping into the SPY with you guys here, looking at our intraday perspective off the bat again from Thursday, having our gravestone doji following through and dropping below our 20-day moving average. As you guys can see here, again, opening on the lower end of our green candle here and closing here on the upper end, showing us that we are very much testing our 20-day moving average to the upside here, looking to see if we will either get that rejection on that anticipation leading into Fed minutes on Wednesday. That is the outlook as far as that intraday momentum on Tuesday. However, as far as Wednesday and what we're looking for, if we have a possible continuation on this cool down, for example, on Tuesday, then I would be looking to see if we can possibly get any type of reversal momentum here. Jumping back above the upper end of our 20-day moving average will be the watch, looking to see if we can get that continuation on bullish momentum. Again, getting that bullish candle structure on the upper end of our 20-day moving average as we have been looking for, and closing above our 416 level that we had, again, from our prior gap down. So again, this has been the watch if we will possibly continue on with bullish momentum. We do need to close above our 416 level. Again, we did break above it, but we did have our wick to the upside. We need to close above our 416 level to show that we can continue. But again, currently we are cautious to the upside, looking for that possible rejection on resistance here for that possible bearish case scenario, in my opinion, going into Tuesday. So again, going into Tuesday, assuming since we had, again, PPI coming in higher than expected on Thursday, again, our inflation report giving us that gravestone doji and followed through, in my opinion, with that anticipation leading into Fed minutes on what our Fed minutes data may come out as, we'll very much, in my opinion, get that anticipation from our data that we got last week. So again, we will see exactly what happens Tuesday. Very cautious, in my opinion, even intraday. If we get that, again, confirmation intraday on the 1 hour chart, for example, and reject our 20-day moving average on the daily chart, then that's what I would be looking for. Now, looking at our swing perspective here on the weekly chart, as you guys can see a couple weeks ago, again, mentioning that we did close above the upper end of our channel that we have been getting rejections from multiple times here. So again, multiple rejections, closing above the upper end of our channel, continued on with that strength. Now, assuming if we are going to continue with that swing momentum, we do want to assume that we need to retest our 20-weekly moving average if we are going to cross higher here. So again, going into next week, what we will be watching for is to see if our 20-weekly moving average does cross above our 50-weekly moving average. So again, that's what we're going to be watching out for. We want to see if we do have that assumption on that retest, and again, for that possible bullish candle structure, or if we are going to get a rejection, possible major sell-off, then our 20-weekly moving average will not cross above our 50-weekly moving average and get that bullish candle structure. So again, that's what we're looking for as far as confirmation on that swing momentum. Again, a nice continuation that we did have recently, but now sitting on a cool down. And now looking at our monthly chart again, as we have been talking about, again, looking at our monthly chart, looking for that assumption that we would be rejecting our 20-monthly moving average since we are testing it intraday. And as far as our swing of momentum, this is what we have been looking for as far as our overall strength. Again, this candle has not closed. We still have the rest of this candle to go. 2 more weeks to go till this candle does close. So again, assuming since we were testing our 20-month moving average, this was a solid candle prior, and then now looking at that rejection again, as we did assume, and having that cool down again with our daily 12 EMA crossing below our 26 on the MACD, as we did mention, and again with our recent strength, again we did mention that our 12 crossing above our 26 will be key here as far as that long-term momentum. Again, our 12 crossed below our 26. Again, about a year ago, we did have that continuation on that sell-off here. So we are very much looking to see if we will possibly curl back up here, cross our 12 above our 26. But if we do not, then we will have, again, that narrative of our 12 crossing below the median of our MACD for that major sell-off, and then looking for that possible cross later on. If we're going to be looking for any continuation, will be key. But again, this monthly chart has been telling the tale for us here, guys. Again, as we're testing our 20-month moving average, a very strong resistance on the larger time frames. very much on a cool down at this point in time, but very much going to see if we do possibly get any bullish momentum, if we do possibly close above our 20 monthly moving average going into this month, will be the watch as far as that long-term momentum. And to recap on our intraday perspective, again, closing below our 20-day moving average, looking to see if we will close below 405 for that assumption that we would test 401 since we did drop below our 20-day moving average, or to the upside, if we do close above our 20-day moving average going into next week, we'll be looking for that bullish candle structure that we have not got here above our 416 resistance that we have been talking about again from our prior major gap down that we had here. So again, this gap down here at 416 has been the number one watch that we have been watching. And as you guys can see, we have not broke our 416 level, closed above it since we did test and we did look for that possible bullish candle structure. We have not closed above that 416 level. We will see exactly what happens going to Fed minutes on Wednesday. That very much will predicate exactly where we're going to head next, in my opinion. And again, in my opinion, as we have bad data, again, bad PPI data coming out on Thursday that we did have a pullback from, we may assume that the Feds may have a restrictive policy to come, as a lot of them have been mentioning, and that Powell may react similar to those Feds that have been speaking throughout the last week. So again, keeping that in mind, a lot of Feds have been pretty hawkish, mentioning that we have possible increases in rates to come if inflation does show us any more increases like we did again with PPI on this gravestone doji. So again, keeping that in mind, we'll see exactly what happens going to Wednesday. We will be cautious. Now again, with that said, if you are a day trader, if you're looking for very volatile breakouts, pre-market news before market open that you wouldn't believe that you want to be watching before market open, very volatile breakouts, again, breakouts within the same day, go to instables.com in the description below. And for only $15 a month, you will never miss a breakout alert today. Again, all of you instables, again, continuing to take what the market gives us. Very cautious this last week with CPI. Not exactly what we were expecting. Again, higher than expectation, but again, lower from our prior month. And then PPI also unexpected coming out on Thursday. So again, we will stay cautious, see exactly what Fed minutes shows us on Wednesday, where our Feds are, what exactly our outlook will be. And that very much, in my opinion, will determine what follow through we possibly have here. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all. Have a blessed 3-day weekend, and I'll see you guys in the next video.